You're going to utilize that depreciation to wash all the income that piece of real estate produces. So you will pay virtually no tax on the income. And really the way you look at this is a deferral game. And I think we should carry this forward and talk about 1031 exchange strategies.
Yeah. I think another way to say it too is from a tax perspective, it's a return of your capital instead of a return on your capital.
Yep.
When you get a distribution or a cash flow dividend from a real estate investment that we're doing versus a bond or treasury or something like that.
And that's just one way that you, like your CPA, when you have a firm, sets it up. So you're kind of, but even simpler, whether it's on or of, you have losses that shelter it.
100%.
Right.
Yes.
So, and it's because of the depreciation. So you don't pay any taxes on the income. And then when you go to sell, right, you're only that will bring down your basis, right? The income that you receive brings down your basis because you're sheltering. So say you put in $1 million, you got $500,000 of income over 10 years. Mm-hmm. Your new true basis is $500,000. So when you go to sell that property, you will need to pay depreciation recapture on the $500,000, which is roughly 20%, right? The tax rate. And then you'll need to pay capital gains tax on the delta between $1 million and whatever you sold it. Let's say you made another $1 million. Then you pay capital gains on the $1 million. But that's if you don't elect to do a 1031 exchange. So Blake, I'll pass it to you just because I was talking for a little while. Talk about this is a deferral game, right? Real estate is not tax free, but there is a way to kick the can down the road to defer taxes. And that's what we elect to do, and many of our investors through the 1031 exchange. Do you just want to go and explain that and explain their structure too, of deal by deal and not doing a fund structure and having the excess flexibility for these types of strategies?
I'll kick it off with the fact that we buy a given mobile home park with a fresh LLC, or we're coming in from a 1031 ourselves with selling a mobile home park, and that LLC is now in an exchange, and then we're pursuing a new deal with that one. And so the exchanges are the best way to defer gain long-term and focus, I'd say, on the cash on cash portion of the return. And so the name of this show is the CashFlow Quest. We are hyper focused on cash yield versus gain, because we can use tools like the 1031 exchange and continue to spool the amount of equity in a given asset, or go take a 2x return on a sale of an asset, and then move that money, which is now, let's say it was $1 million, now it's $2 million. Now you go buy something that's bigger, better, and spins off cash flow on the 2 million. So we are hyper focused on zero tax, and we solve for basically zero. If we pay 10 grand in tax in a given partnership, in my opinion, I didn't do the best job. So we are hyper focused on the cash flow return on equity, which if you do 1031s and you play the game and you have the deal flow to do and execute 1031s when you need them and when you have sale proceeds sitting with that time frame in mind. So you have to move the money, and when you close escrow on the sale, you have 45 days to decide and identify a property that you'd like to pursue, or a few properties that you'd like to pursue. There's a couple rules there, but that's the nitty gritty. And then from there, you have a total from the close of escrow of your sale. You have 6 months to put it in and close it on the up leg, or the property that you've chosen to pursue and buy. And if you can get it all done in that time frame, which seems tight, but if you're doing deals and looking at deals regularly, typically it can be done. And it's also a fun way to I'd say get the deal flow mechanism within your business to kick up into another gear, because when brokers hear that you have an exchange and you actually close, everyone hears about it, and so they start sending you deals because they know you have money burning a hole on a time frame and you're going to have to buy something. So we've had a lot of fun with that over the years. And so when you defer all that tax, now you buy a better quality asset, which now our goal is always to 2x that. So it's $1 million, now it's 2, now we're going to take it to 4 over 5 to 7 years is our normal strategy. We are able to do that completely tax-free, and the cash flow is tax-free. until you're completely out of basis, which takes 20, 30 years. If you've done exchanges too, because when you go higher up in price on exchanges, you get the difference in depreciation, so you start to accumulate more and more passive losses that you can utilize.
He makes it sound easy, but we just got to point out, and I'll help you on your investor conversation side, is that is not easy to do consistently. And the fact that we do that, and there are other great companies that do that, I think that's one of the like red carpet services that we do provide. Mm-hmm. Like it's easy to sit here and talk about, but most people can't find the deals in time or good enough step ups. Like you should pat yourself on the back. The amount of 1031 exchanges we've done over the last 15 years is a statement. It's hard, and it's part of why people come do business with us. I think
it's I'd say the big value we're bringing to the market is this tax planning strategy. A lot of 1031s, a lot of people that have rentals that really don't understand the real estate professional designation, how it can really offset. I'd say we have a firmer push to be like, hey, you could be real estate professional. You just have to tweak this a little bit. Or it's like, you're in your groove. It's my wife doesn't want to work. It's like, can she just drive around and make note and use an AI tool to make sure you spend the 15 hours a week? He's like, that's all it takes,
Yeah.
So we kind of go through that. And then the 1031 is the ticket. I think that in order to play the game on any level, like you have to take that initial risk. And typically I'll have a line of sight or something that we're seriously pursuing as a new deal before a deal clicks through and sells. And so it's an engineering feat versus a crazy deal make effort. It's more of an engineering game on timing.
Yeah.
And you pull levers, and then typically they'll let me on the sale end. They'll let me extend if I need to, or they'll be workable. Or I'll tie up a property with some extensions, knowing that within that amount of time that we've just tied up the escrow for the deal we're pursuing to purchase, we'll be able to sell the deals that we'd like to sell in that time frame. It's fun. Thank you for the compliment, Ty. But there is always like this structural Hail Mary moment where you have to like, we got to commit, close it, and then we're off.
And if you're a plumber or a contractor or whatever, you're probably like, that's not your gig. Do what, like Glenn, you always say, do what you do best, make money, and come with us as an LP, and we can go on the adventure together and grow your equity.
And I think just to put a cherry on top of this, that's a formal 1031 exchange, but there also is a lazy 1031 exchange, which is if you're a plumber or somebody who has a rental that they want to sell and wants to not do this formal process of an exchange, within a 12-month period, you can sell a property like that and take the gain and invest it in something, the cash, and hopefully the bonus depreciation 100% comes back. It still would work given current laws, but it wouldn't be as juicy.
Well, that just depends on how much gain.
Exactly.
And
there's variables to that.
The key is to have it held as a rental property. So then it's actually a passive gain.
Right. Mm-hmm. Right. And so that would work too. And that's an option for people that maybe don't want to go through that formal process or don't have
and sometimes it doesn't economically make sense.
Exactly.
If it's like under $1 million, and depending if you bought it a couple years ago, so the value hasn't improved that much.
And it still has to be like kind. There's still rules to that. But it is an option that I think is a good one for a lot of people.
Oh, we love that.
Yeah.
We love the lazy time.
Exactly.
Also, nothing against plumbers. We love our plumbers out here.
Yeah, that was just I
thought you were going to tie it back to at some point you got to cut the water off and replumb a fresh line. I thought you were going to go somewhere
towards cash flow.
At some point you can't flush the toilet anymore because I got the main cut off.
Yeah, and like the lazy 1031 exchange strategy, just because as we're talking now, like I'm thinking about all the questions I get on a day-to-day basis.
What else do you hear?
Well, one thing just on that, it's not like you sell and you reinvest in the same year. You don't pay taxes like as soon as you sell. You file for taxes the following year to pay last year's tax bill. And so the simplest way to think about it is that you sell a rental property, and within that same year, like you're saying, 12 months, but it needs to be in the same calendar year.
So if you sell in June, you only give yourself 6 months. If you sell in January, you got 12 months.
And if you
don't sell in October and November unless you know exactly where that money's going.
And you can reinvest in anything, but mobile home parks or like a gas station or a car wash, something that has a lot of equipment that's real property, is going to provide the most year one depreciation. And so what you do is you create a gain, but then you reinvest within the same year to offset with a loss, paper losses, depreciation. And then that helps offset your gain. And it works on the federal side. So you could most of the time, depending on where the bonus is, if it's 100%, you could always bet that you can clear all your federal gain.
Right.
As long as your capital.
To be more specific, it's federal gain, not state gain.
Yeah. Well, we're in California, right? So California doesn't recognize it.
Yeah.
And that's the way that you get around that. And you're like, it works great for people because every time someone sells something, they know they have to pay taxes. But then when you educate them, you're like, what's important to you? And it's, I don't want to pay that much taxes. And I actually like cash flow. I actually like real estate.
Yeah.
That makes the most sense. And then just reinvest it, move from being an active owner, go to passive.
Mm-hmm.
Let us do all the work, save yourself a couple $100,000 on the tax bill.
Right.
And call it a day. You're going to get all the same benefits without any of the ownership or responsibilities. And so that's why we call it the lazy 1031 exchange. It's not really a 1031 exchange at all, but you have to give it some sort of name.
Call it that. Sure. Yeah.
And it's a great strategy that has come about because of the cost segregations that you can do and then the bonus depreciation.
Mm-hmm.
All right. If you're enjoying this content, hit the subscribe button and turn on notifications and check out the description below for our websites listed. Thanks a lot for joining.